Brian's with us. He's keeping an open mind for business, aren't you? Yeah. Let's have a look at the markets, first of all.
Well, Asian indexes making modest gains in Thursday trading after a record close on Wall Street Wednesday. Japan's central bank wrapping up a two-day meeting. They'll be staying on course on monetary policy, interest rates and bond yields while cutting their inflation forecast. Nikkei in Tokyo up around 0.6. The U.S. and China failing to come to agreement on new steps to reduce their trade deficit. Mainland China indexes seeing some progress with the Shanghai Composite up around 0.3. The Kospi in South Korea up around 0.5%. Well, it's still around 45 minutes before major European markets open, but it's a big day as investors will be keeping a close eye on a meeting of the Governing Council of the European Central Bank. The ECB has been essentially pumping money into the European economy for over 2 years with its bank asset purchase program, but Bank President Mario Draghi has been dropping hints that the time to wind that program down is coming soon. For more on the subject, we're joined in the studio by Naeem Aslam, Chief Market Analyst for Think Markets. Pardon me. First of all, Naeem, what are we looking for today in terms of possible interest rate moves and if there might be a pullback or tapering of the bond buying program?
Thanks for having me. I think ECB is the 800-pound gorilla today, and everyone is asking, are they going to do something in relation to tapering or interest rate? Well, here's a fact. There is going to be nothing on that in this meeting. So the best that you're going to get today is an opportunity for them to level the playground for the actual event. And when would that be an event? In our perspective, that will be late in September.
That's September. That's the next September meeting, right?
Naeem, what's been the actual effect then of the ECB's buying program? I mean, on the European economy, I mean, would you say it's been a success? Do people see it as a success?
Certainly. If you look at the economic data and you compare soft data, which is your survey data, and your hard data, which is your industrial production data, they are catching up, and they both show the color which are very positive for the economy. For instance, you look at the unemployment data, you look at the consumer confidence, you look at factory numbers, they're all saying that, okay, the patient doesn't need this much of an injection, this much of a medicine, and it is time now to wind down that ultra loose monetary policy.
So why is it not going to happen now then? I mean, you're saying it's not going to happen, so why?
Because of the tapering tantrum. You certainly don't want to see the ECB coming out of the gates extremely aggressively. This process needs to be very gradual. They need to manage the market expectation. Remember, it wasn't that long ago when the president of the ECB gave this speech, and then we've seen this massive rally in the euro sitting at 115, which is a great if you're traveling abroad. The euro can purchase more, but certainly it's not really that much of a great news for economies such as Germany. The relationship between DAX and the euro is a very important relationship, and they both move in opposite direction. Yes, you know, the France uncertainty was pretty much on the agenda for traders, but now we have a lot more certainty within France.
It's almost a psychological tactic to keep investors calm. It seems like they're going to have to pull the stimulus back eventually. Probably is what we're thinking is around September. We'll hear that in 2018 the stimulus program will begin winding down. When it does begin winding down, what's that going to mean for investors?
I think it would very much entail that you will see less liquidity in the market. The market wouldn't be this much friendly in terms of you achieving your goals with respect to any new loans. And at the same time, remember, once the ECB has done tapering, the next step comes to your interest rates. So that means that your mortgage repayments or any sort of loans that you have, you'll be paying a higher interest rate. Not yet. I don't want it to scare you, but in the coming years, that would pretty much you will see, as we have seen in the US.
Yeah, we've seen it in Canada, and we were expecting from the Bank of Japan, and it didn't happen today. But so that taper tantrum that we saw after the center speech, Draghi's center speech, sent the value of the euro really rather high, actually. And where do you think the euro goes from here when the tapering program starts to wind down?
I think that's an excellent question. A lot of that move is already baked in. So if you are expecting that the euro is going to explode when they will announce this, well, certainly no, because investors and traders are already baking that move in that. So where do we see that euro moving? We certainly still see this uptrend continuing and moving towards the level of 120. But it's not going to be that explosive move. It's going to be a very gradual move. We would say that we do see euro moving perhaps to 117 coming in September.
So obviously today we're essentially looking ahead to September.
Yeah.
We're setting the stage for September. It's the summer lull after this. Well, what's next after September? Will we see the interest rates start to come up in 2018?
Well, I think what is next after this meeting, which is quite important, is the Jackson Hole meeting in a month's time, because that's where he's going to set the agenda. That's an academic sort of a media, and then he's going to say, okay, how are we going to scale back from this tapering, right? Because we know that the ECB's head is against the ceiling when it comes to how much purchase they can do within these bond market, especially with Germany and especially with France or Spain. So they have to lay down a very much detailed plan in relation to how they are going to scale this process back and when they will come to the agenda of an interest rate.
Very elaborate, very cautious procedure that we're looking forward to in the coming months. Thank you so much for being with us here.
Yeah, Naeem, good to have you with us as ever, Chief Market Analyst for Think Matters. Thanks.
Thank you.
Now, finally, for business from Brian, when you buy a new car, what do you really love about it? Of course, it's nice and shiny, it's nice and big, it's nice and new, but it's the smell, isn't it, as well? Americans love it. The Chinese, though, apparently not so much.
It's almost a selling point. In fact, I would say it very much is a selling point for U.S. vehicles. Customers seem to try to hold on to that smell as long as they can. They even make air fresheners to try to approximate this scent. In China, not only do most customers not like new car smell, it's one of their top concerns. That's ahead of road noise, fuel efficiency, and even engine problems. And that's why Ford Motor Company's Chinese division is doing everything it can to avoid odors put off by new interior components. The company now employs 18 smell assessors, known locally as the, quote, golden noses, who evaluate not just the strength, but the notes, the bass, the top notes, all of that, of every material used in the car.
Is it April the 1st?
What's that?
Is it April the 1st? I don't believe this story.
I believe this is true.
I love new car smells.
Well, listen, the notes they have include a burnt tire, which hopefully is not just a tire on fire in the factory, bad meat or dirty socks. It makes you think about new car smell in a different way, and perhaps it's not so nice after all. Anyway, it's another way for Ford to compete in the world's largest automobile market amid slowing industry growth there. They're obviously doing everything they can, whatever it is, to
It's
get
great.
that edge.
It's like having a new carpet. It's nothing like a good a new carpet, a new car smell. All right. Thank you very much, Brian. Thanks to Naeem once again as well. Very latest news right after the break here on France 24. Don't go away.